Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. So let's take a look at the euro currency again. So it is not quite clear the reasons for that, but definitely the short-term sentiment is changing. So because currently we have too much different drivers and factors that could really make impact on the overall situation. First of all, some statistics that we will get, and today and tomorrow, this is the price consumer index expenditures. So we will get the inflation in the European Union as well tomorrow. Non-farm payrolls, of course, this will be also make impact. Geopolitical situation also remains difficult, and personally, guys, I do not know what the final will be with story with this ruble payments for the gas. So today is already the final session of the March, and some decisions should be made. Whatever it will be, definitely it should probably shake the boat, and what we definitely should get in the nearest time is volatility. But in general, based on the performance of the euro currency and performance on other markets, it seems that euro currency, well, definitely has chance to complete the target, or even we could get a bit further upward direction. This upward direction could be even more extended. It's just because we'll take a look at the interest rates, first of all, in the 10-year yield. In the United States, you could see that high wave has been broken down, and now it's market showing some retracement, some pullback and easing, which is short-term bearish factor for United States dollar. Additionally, if you'll take a look at the dollar itself, this is dollar index. You can see here something like triple top is forming, and market is ready to show a downward acceleration. Besides, this is daily chart. Besides, if you'll take a look at the weekly chart, you will see that by the end of this week, we probably should get the bearish reversal week. So you can see market this week creating the new top and close below the lows of the previous week, and probably if it will move slightly lower, it will be below the lows of the 3 previous weeks. So it's become some kind of the low of the month. So this performance and interest rate performance definitely provides the backwind for the euro currency, which means that we should get a bit more extended upward action. So that's why currently we're not considering taking any short position on a daily, weekly time frames. Only if you are a scalp trader, you would like to trade on the intraday time frame, you could consider taking the short position currently. But for a higher time frame analysis, it's probably we should be focused on the upward direction and watch for support areas. So on the 4 time frame chart, here is what we have. Actually the same OP target, 12.15, and of course the cap. Cap has not been filled yet, and that usually works like the magnet and attracts the price to make it to close the cap. So that's why this is an area between the 12.15, 12.80. It will be the primary target for euro currency in the nearest time. If we will get some lower payrolls or say high inflation, then probably we could get the further upward acceleration on the euro currency. Again, positive decision with these payments for gas and avoiding of the crisis in the European economies also will be definitely supportive for the euro currency. So, meantime, if we'll take a look at the hourly chart, you could see that market has formed, well, minor bearish pattern. So it is not necessarily a reversal pattern, but it suggests that it might be some retracement. So we have the free drive pattern. Actually, if you calculate the extensions, you will see that they matching very accurately. So you can see second drive 127, third drive 1618, and if you will calculate the same from the second drive, you will see the very good crossing of the 2 extensions in the top. So from that standpoint, this is good background. That is the pattern what I'm meaning when I talked about the bearish setup for scalp traders. If you'd like to take short position, you could try to take the short place stop above this top and be ready for downward action. A usual target of this pattern, as you know, is a low between the second and third drive. It means that market could reach 111 area probably on average as the destination point of this retracement. That in turn an area that we could keep an eye on if we would like to take the long position. It means that once this pattern will be completed, this is the level to keep an eye on first, where market potentially could restart upward action. But in general, guys, for taking the long position, here are actually theoretically two scenarios are possible. First is a classical approach, is just waiting for a pullback and reaction on this pattern. Second is using stop buy order. So you theoretically could place the stop buy order above this area, and if market will fail to follow this pattern, market turns up again, you're stepping right on the moment of the breakout. But in the current situation, this is in general, but in the current situation, why I do not offer you this potential setup, it's just because take a look at the daily. Market stands at overbought, and if you place entry right about the overbought, it's very big chances that you will be hurt by the wash from greens or something of that sort. At least market in a very short-term perspective has no ability to move significant upward action, if only we'll get some exceptional driver factor. So that will be that is our rule and overcome any technical barriers. So in this case it might happen, but since we do not know whether we will get it or not, that's why we should be careful. And from the technical point of view, I am not recommending currently using this tool with the stop entry order. Although in general, if we wouldn't have any overbought, that could be considered, and that might be the one of the scenarios that you could follow. That's why in the current circumstances, for taking the long position, since market is forming some short-term bearish pattern here and market stands at daily overbought, it makes sense to wait for a pullback and then see what we could do around the major support areas.